I think with any investment, there's going to be risk, and it's what you can swallow. It's what is your risk appetite, whether you're investing in, like, the latest trend seems to be crypto. And I have a lot of close friends who are just like jumping on the crypto bandwagon. And don't get me wrong, does it seem enticing? Yes, but do I not understand it fully? And am I not able to wrap my head around the risks associated with it? No. So am I probably going to stay clear of it for a little while? Probably, or ever. Until I get too much pressure from them. I mean, with any sort of investment, it's, I don't know the exact saying, but knowledge mitigates risk, right? So it's the more you can understand something, the less risky it is to you. So when someone says, "Oh, why are you investing? Why are you getting a rental property in St. Catharines? Why aren't you buying a condo in downtown Toronto when prices have gone up 30, 40, 50% over the past, or more than that, multiplied over the past 5 or 10 years?" They probably don't understand. They probably haven't run the numbers like you and I have. They probably haven't looked at what the cost of a detached home is in St. Catharines or Niagara. They haven't looked at year-over-year appreciation rates in St. Catharines and the Niagara region, which have been really strong as well, and which have, the Toronto impact has rippled out, has had that ripple effect in really all of the surrounding areas. So that's the one piece on risk that I think people need to understand. The other is what's going to allow you to sleep at night. Like, is having 20 homes that are all leveraged at 80% loan to value, and you're scraping by at 200 or 300 bucks a month, but when a big capital expenditure comes around there's a flood and it causes 20,000, and you can't carry that one property, you have to pull from other properties. What happens then? What happens when there's a huge decrease in the or there's a huge slowdown in the market? I think ultimately that's different for everyone. And I think there's a time for being more risky, though. Like, I think folks like Dave Ramsey, or I think you told me a story about somebody who had just slowly acquired homes. I'm not sure if it was York Region or Richmond Hill or something like that. And over the course of, might have been 20 or 25 or 30 years. But after that 25 years, he had paid them all down, or had started buying them in cash, however many years ago. And there's certainly value in that, but for somebody who's like starting out like myself,
it's going to take forever if you were to
save up for that. Nobody's, especially with housing prices in the GTA and surrounding areas, like, it's just not, you cannot do that, so you must use leverage. So I think there's a time and a place for using debt to propel your scaling up. And I think obviously we need to make clear that we're not recommending against that. I think we're just we're saying,
I guess it goes back to what you mentioned, right? Thoughtfulness, right? At the growth stage, it makes sense. You want to lever up, you want to acquire, you want to grow. The biggest and hardest question is, when are you no longer in that growth stage? Because you can be in the growth stage for 50 years straight.
Your whole life,
right? Which is, again, there's nothing wrong with that, but is that aligned to the real estate actually serving your life, or does it actually make sense for some people to maybe, let's take a step back. Let's decide which properties are sort of the underperformers that are always causing us extra expenses every month. Let's start to let go of those. Let's pay off the good ones, keep those, right? And anyways, you're definitely right, though. Leverage has its place. And honestly, I work with very few clients that are able to purchase in cash. But I have a few, which is actually surprising. I was surprised when they reached out to me. I'm like, you're not getting a mortgage? Okay.
In like the GTA and surrounding areas, like that, those
Niagara region, right?
Okay, so I mean, still, that's impressive.
It's still crazy. But you know what I find? People who buy in cash right now it's tough, but when I found some deals for them, they got good deals because they could pay in cash. So they didn't have to worry about a financing condition. They could really negotiate. Now every offer is firm, so it's as if you have a cash offer, but at the time that I helped this one specific client, he got probably the best deal, yeah, at that time, right? That I could have possibly seen. It was a funny deal. They were holding offers for a week and a half or a week, right? We did our inspection during that time period. We got that out of the way. We knew it was in good shape, and there was a tenant living there. They were holding offers. I think because the tenant was there, who was leaving. Actually, they were leaving mid-August, I think, and this was around July. We waited till the offer holding date, right? This was a semi-detached home in St. Catharines. It was listed for around 279. We were ready to offer 290, either 91 or 99, right? That was sort of the prices we were planning on offering, firm, right? No conditions. And then the offer day comes, no one else offered. And we're like,
Oh.
Wait a second. We dropped our price all the way down to like 271 cash, sent it in, and they accepted it. So they got such a good deal on that property.
270. What is this? When was this?
2 years ago now. 2 years ago
Was it
now.
a semi or
Semi? Yeah, semi in
still
St. Catharines. Yeah, that property is probably worth close to 500 now. Close to 500. So even as a return on investment on their purchase price, even without leverage, they've still done really well. But yeah, it's that's not necessarily anything I can take credit for, though. The entire market's just lifted. Everyone who's bought has done well. So
right.
I'm not taking credit on the way up, so I don't have to take credit on the way down. I'm just the intermediary here, right? So if you were giving advice to someone getting started as a real estate investor, trying to sort of figure out the ropes and make that first purchase, having just recently gone through the process yourself, what words of advice would you give them?
Make yourself as knowledgeable as you possibly can in the endeavor that you're going into. I started reading sort of like last summer books on real estate investing, and then I started reaching out to people who I had just come across in my ordinary life who had some touch on real estate investing. So I had a friend who I played soccer with, and he happened to be a real estate agent. So I started hitting him up on WhatsApp, something as simple as that, like, I had initially thought about Oshawa as my primary market because, there was lots of things to like about Oshawa. And then I started to look a little bit more into it, and I thought, well, I reconsidered that. And that's, that was sort of, I had those initial thoughts. And then I reached out to some folks that I work with, and the talking about what homes they had purchased. And I work with a woman who's very successful and who has bought homes in Toronto. I spoke with family members, so I was just reaching out to different networks, and there's so much value in that. Like, it wasn't even anything formal. It wasn't like those real estate meetups. It wasn't even anything as formal as that. It was very informal. I started listening to podcasts. I think there's a ton of value in that. Throw one on at 1.5 speed and just like let it resonate while you're working out. And are you going to capture every single thought that's in a podcast like this one for you, if this one's turned into a podcast? No, but will you pick up little things that are really important that will resonate with you, or that when you're going into your home, you're like, I got to look for if there's a pony panel or something. I remember that. So like little things like that, and all of that just goes to becoming more familiar and comfortable with the subject matter, I think. And that's when you have that empowerment through knowledge, I think you can go out and feel so much more confident in what you're doing, and not feel like it is a huge risk that you're taking on, because putting in 108,000 in cash into a property is a lot of money. Like, by any stretch, I think, largely to anyone other than maybe Warren Buffett and Dave Ramsey. But yeah, I felt comfortable making those decisions, and will feel comfortable because I have started to surround myself with people who do this type of thing, and become more of a subject matter expert on this type of thing. And am I always learning? Yes, but am I still in that sort of phase of becoming more knowledgeable?
Yeah.
So
I think you've done a few things that are good, which is to become or to become knowledgeable about real estate investing, learning, listening to podcasts, but you definitely didn't stay there for too long, because I do find some investors spend years learning, and there is a time and place when you just take that next step. Okay, let's go see some properties and run the numbers on actual properties that you've seen, so that you actually also get this second perspective of what is the home like, right? When we talk about this much cash flow, it's kind of funny, right? This deal that you bought has close to $1,000 of cash flow. That itself may make many people think, whoa, that was a really good deal, which I think it is. But this quality of property that you've bought for the amount of cash flow that you've received, I think is a ridiculously good combination, right? Because you can get properties where your net cash flow after expenses is $1,000, but it may be a rough property in a rough area of town that's like 120 years old, where there's like a tree stump that's holding the house together and the floors are wonky, right? So on a property like that, $1,000 of cash flow, you are definitely putting that money back into the property over the course of owning it, right? But you've managed to get a property where the quality was to a certain degree, you're able to get a good tenant as a result, but you still have that cash flow. So that combination is something that it's hard to fully understand just from the podcast, because when you listen to the podcast, you hear more about the financials, the numbers, the strategies. But there's that next piece of, okay, let's go out, see some homes, see these neighborhoods that where we like, and also the neighborhoods that we don't want to invest, right? So to have that clear understanding of, okay, we're not just going to buy any property that cash flows. It needs to be sort of a good home in a good area, right? So
yeah, I was just going to say that you don't want to get stuck in that phase of quote unquote like analysis paralysis.
100%.
And I think that can haunt a lot of people, and it probably prevents a lot of people from getting into the market as a lot of people get into the market as their principal residence just because that's the norm. Like that's the sort of your baseline for real estate investing. But going beyond that, it's always this there's this huge hesitation amongst people I speak with who aren't in the industry. But once you get past, I think the ripping off the Band-Aid with sort of your first one is a really good way to motivate you to see what the potential for something like this. And to your point, I think getting on the ground and like even just like when we went on our first for some of our first viewings, I spent a few hours beforehand just sort of touring the area. That every time I would come out to St. Catharines, because I am Toronto based, I actually enjoyed that, just like going around and driving around the areas. And I was like, okay, well, there's this here, they got this infrastructure here, it's really close to the highway, hospitals in this location. I was thinking, okay, I haven't lived here for 30 years like a lot of people who invest in the markets that they're really familiar with, but I can learn by being on the ground, and I can get that sort of firsthand knowledge and getting your feet wet. Like just like at one point, if you want to be successful in everything, you're gonna have to rip off the Band-Aid, and whether that's, I don't know, learning the piano or a sport or any other endeavor in life. So
100%. I think that's great advice. Rip off the Band-Aid, get started, right? So research, become familiar, and then don't just stay there. Go actually see some of these neighborhoods, right? Look at some homes. Really run the numbers on like specific properties that you're really considering, and just get to the next step and just keep moving forward. And I think I have a lot of empathy for the people who are stuck in that analysis paralysis, because it's definitely not easy, right? I found myself just last year purchasing the first property that I bought without partners, right? So every deal prior to then I had sort of investment partners. So this was the first one where it was completely on me, right? If the mortgage needs to be paid because the tenant's not there, I'm paying it out of pocket. So everything was on me. And there was a different level of stress I experienced compared to even the deals I'd done before. Like everything logically in my mind said this was a good deal, you have to move forward on it. But there was that piece of, wait, am I really ready for taking this on? I've never sort of taken that first step anymore, right? So I I had to literally do exactly what you mentioned, right? I had to, okay, we've analyzed it 200 times. That's quite enough. It's time to move forward, and yeah, just rip off the band-aid. And the cool part is once I did that, I was able to buy a second property last year, just a few months after, and it was way easier, right? Because I'm like, yeah,
Right, right.
I've already become comfortable now with that process. And in a funny way, the second property should have been scarier than the first, because the first was basically done. It was a tiny renovation, almost nothing to do. The second one was a full duplex conversion, going permits with the city and all that, right? But because I had ripped the band-aid off just a few months prior, it was easy. So
Right,
uh,
right.
yeah, no, that's definitely
Oh,
some good advice.
yeah, getting the monkey off your back. Now I'm still in the process of renting the first one. I'm just like, I'm already looking at deals. I was actually going to send you an email to start thinking about seeing, uh, putting my mind to seeing more houses in the Niagara region. So
Mm.
once you, yeah, I think there's so much value in getting the monkey off your back for sure.